Welcome, everybody. Thank you for joining on New Timing. I'm Mahesh. I'm joined by Jackie, and Naeem is joining us too. So today's session is a little special for all of us because we have Naeem. And let me just put spotlight on Naeem. By the way, quick introductions. I'm Mahesh. I worked in all the big companies, and Naeem has worked in startup area for decades. He has started his own startup. He teach entrepreneurship at UC Berkeley, and he has raised millions in dollars himself, and also helped raise another 10 or hundreds of millions for other startup that he has mentored. And I want to give special thanks to Jackie who made it possible. And Jackie, maybe a quick introduction.
Yeah, so I've actually worked with Naeem in the previous startup, Challanges. I've kind of always worked with a bunch of startups, worked in operations and eventually product management. And now I'm venturing into more of the agentic AI space. And that's how I met Mahesh. And so I'm looking forward to Naeem's perspective on how he kind of approaches this subject.
Yeah, I think Mahesh introduced, but if you want me to go a little bit deeper introduction. Yeah, I'm an electrical engineer by training. Got degree from Brown University and then later graduate school in Minnesota. So I have been, worked for a large company, Honeywell, started my first company age 26, done 7 startup companies, CEO 5 times, multiple exits, and raised money over $100 million in different things. So companies like, if you have an iPhone or a Mac with a fingerprint sensor, we invented it. Apple bought the technology. Company about mobile security, Oracle bought that. So several companies. I've invested in 22 companies and have a portfolio. I'm a limited partner in 7 funds. I've been teaching entrepreneurship for 20 years at UC Berkeley and also for the last 7 years at Northeastern University, which has a campus here. I also taught at Brown University and other universities overseas. So a lot of experience. I wrote 5 books on entrepreneurship. They're available on Amazon or naeemzafar.com.
So the goal today is me and Jackie had some questions that we got from our community. We will start with that, but it would be very fluid. So let me get started. Get us all started, Naeem. I think most top of mind thing, and this is like just to give you an idea on our community, mostly product managers, builders in AI, and have like either people are iterating in their companies in new dimensions. So what is that AI dimension and a product in that area? Or they are starting something of their own, and most of them have their own ideas, and all of them want to one day be like you and say like, 7 exits and 8 investments. So that's the audience here. With that audience, the top of mind question in AI is what's the right problem to solve if you are not working for, let's say, you don't have a PhD background and you don't have a lot of like in-depth infra experience, which is easy, like you can go out and build something there. But if you don't have it, how to identify the right problem? You have spoken about that as key things in your books. What problem space you're going after before looking for solutions? And as we see the landscape today, right, there are few companies which are solving the AGI problem, which is like super intelligence. You can think of OpenAI, Google, and we just heard like, Jack is on a hiring spree and super intelligence. He's building his own team. So that's one segment. Second is we see a lot of tooling companies coming out and trying to solve it. This is Pinecones of the world, which we have seen in last 3 years ago become successful, building vector databases, or MemZero with their memory specific tool. So you can build those tooling layer. And third is, okay, I have domain expertise. I'm going to combine these. I can take and build agents which go and solve this vertical small thing that I'm going to go. And last thing we have iterated in the community is also thinking about AI services, like service business, but AI enabled services, which is how can services was a boring business because not a lot of profit margins, scaling requires humans, but a new in AI world, maybe that's a very different way to look at it. So just laying down these 4 that we have consistently iterated with this group. So wanted to know what's your take and Don't bind yourself to 4. You can just take us to 10 or 2. But where, like, how to find problems if I don't have a PhD degree is the question.
Well, first of all, let's set away the PhD is not something so beautiful that you seem to be somewhat enamored by a PhD. To me, PhD is annoying because you go super deep in one area, but you don't have a clue about the breadth. But people who succeed is the T-shaped person. They have depth in one area, but they have a breadth in many areas, so they can connect the dots. Innovation happens when you connect the dot across different domains, different expertise. That's when innovation happens. So PhDs are a useful tool, but they're not the panacea to the world. Panacea to the world are the people who are able to see the big picture, connect the dots, and have new insights. So having said that, I think to understand some of this ecosystem which you talked about is to look at internet. Back at you don't talk about let's start an internet company. I mean, what does that mean? What's an internet company? So if you break it down, there are at least 3 layers, maybe 4. So let's say what are the 3 layers? Bottom layer is just what makes the engine work. So this is the HTTPS protocol. This is the Cisco routers and instructed about that. Then there are applications on top, which you can, unless you do things like Uber is an application built on internet. In the middle is the middleware with things enable services between the bottom and the top, like Stripe, like Akamai, which makes the whole things work better. So in AI world, there's similar layers like you described. I mean, there's a LLMs, RAG. These are all the infrastructure layer. That's a lot of money has gone into that. That's what we have. Great. But there will be only a few winners because you don't need, 10,000 LLMs. There'll be SLMs, small language models and RAGs and whatnot, but LLMs we got. Now the next layer is just to provide services on top of the LLMs, and then there'll be applications. So this is where hundreds and thousands of companies are all fighting for some critical mass. And a lot of these companies are beginning to emerge. We have seen some emerge, like you mentioned, but there's still the fight is not over. So it will take some time to the dust settles and who will be the winners, who will be the losers, who will find their own niche. So your question was, where is the opportunity? And in fact, opportunity is probably not in the bottom layer because that's big boys game, but in the infrastructure layer, plenty of opportunity. In application layer, tremendous opportunity. So how do you find where the gold is? Short answer, talk to a customer. All these things exist to either open new doors or make the current activity more efficient or more profitable. All of these things require a special kind of applying a new knowledge, doing things more efficiently. Hardest thing is letting go of your previous way of doing things. Look at agentic flow. Most people are afraid to have an agent. So, hardest part of this whole transition is for people to get comfortable with the new reality. You still may remember your grandparents were not comfortable with microwave oven. Or maybe said like, what the hell is this thing? Something is wrong, whatever. So,
it takes away all the nutrition.
Yeah, exactly. So slowly, as we have gotten comfortable with that, and we gotten comfortable with using ATM machines, many years less, there was a time people were skeptical of using ATM machine, trying to deposit your paycheck in a box, in a wall. Well, hello, I'm not doing that.
Yeah.
So it's just a matter of time. But opportunities are everywhere except the very bottom layer, which is an opportunity, but that's big boys game.
Yeah. So I think the key takeaway is don't go to building large language models. Don't go there. Also avoid going to toolings which you're going to play with, but you're going to build it and they have a better reach and better market and a better sales motion. Build on the application layer. There's yet a Facebook on AI agents that is still waiting to be built, and people will accept it. And how? Talk to a lot of customers, see what their workflows look like today, and how can you build the future workflow is the key takeaway. So the second question that comes all the time is that, okay, Mahesh, I talk to customers, I build this idea, and as soon as I launch or I put a page down and I put on your Slack community with just 3,000 people, I see 30 people also trying the same idea with a better website, with a better designer. And hopefully, by the time I was thinking of hiring one engineer, they have already launched. So it's a very competitive or crowded field, Naeem. And how you differentiate in the beginning, like there will be a lot of Facebooks, right? In the giving the same analogy. and how you differentiate in a crowded field, especially in the beginning stages. Should you raise money? That's what I have seen. A lot of companies were able to raise money and then put a lot of gas and then kind of get ahead in this crowded marathon and then like take a lead and now they can run on average speed. Is that the right strategy, or iterating on the product the right strategy, or don't worry about it? Just focus on like what Amazon did in early internet days. What's your guidance there?
So there are three phases to raise money. The first phase is you're already famous. Not famous like you're on the cover of magazine, famous that you have built companies and exited because you have credibility. You can knock on the door of a VC who has funded you and they'll write you a check. So my friend Rehan Jalil did company Vicodus, then he did a company called Elastica. So when he was raising money for security AI, he did not even have a deck. They wrote him a check. Mayfield wrote him a check. So this will happen. That's first phase. So most of people are not in that category. So this is just FYI. The second category is there's a gold rush starting and you are one of the first one off the boat heading towards Sacramento. People will throw money at you because they don't know who's going to survive, who's going to win. So money will be available. That boat is mostly sailed. So you may still get lucky because if you find some niche and you can still get some money just because you're one of the first 10, 20 people. The third bucket is harder, which most of people categorize, which means you really have to find a problem. You need to find a champion. You need to find traction. If you can prove that at least these two people, one is not enough because one could be just your brother-in-law, or could be you get lucky. You need like two people. Okay, one person could be wrong, but two, three people, they can be wrong. There really is a problem and you did find something. Now you can raise money. So point is, most people get distracted by trying to raise money upfront. You have to understand the three buckets. Most people are in bucket number 3. So quit wasting time. Find a real problem. Get 2 or 3 people who are willing to pay you to solve it. And when investors talk to them, they can't stop talking about how good they were. That's when you can raise money. So if you cannot start a company and get to some traction level alone, maybe you are clueless.
So, okay, we found a problem. We have 3 customers and we are working hard to get them to love us. Already they love us because they are customers and obviously they have choices. They chose us. And now we are working on building this.
Just because she married you doesn't mean she loves you anymore. Let's separate the two. There were different dynamics at play, which you had no clue they were. So just because it's a customer doesn't mean they love us. This is a mistake many entrepreneurs make. So once you have a better sense why a customer like you, then you can double down on that. It's not so simple. And just because somebody got you, they were just trying to, get their bonus by checking off a box, or they were trying to, prove to their other manager, other company that they can do that. Who knows? They have strange reasons.
Now we are trying to see like what is an ideal MVP looks like on our marriage also for this product, right? Because you have some idea, but when you actually start building with your customers or start listening to your customers, obviously helps you get in the door. And there, what is your observation? You touched on it. I want to double click on it, which is the idea that with AI, it's much easier to build things. How you want new founders who want to approach you or work with you or wants to take an advice from you, how you want them to iterate in this new world of building MVPs or going faster, or you want them to calm down, build the right thing, put all the logging in place. What's your suggestions there? Just double clicking on how can we leverage the core offering, which is intelligence, and iteration on intelligence is faster than ever.
Let's take an analogy. Somebody wants to learn to play golf. So they go to a golf range and they're hitting the ball. I've seen this happen. Actually, it's actually the real story. And this Indian guy was hitting the ball so incorrectly. He hit it for like an hour. I had to stop. I said, guys, what's wrong with you? You're reinforcing all the bad habit. Take a freaking lesson. He's making all the mistake. I mean, Jackie's a golfer, I can tell her. But the point is, you need to understand why customer's problem is. You have to live with customer and watch them, and especially B2B. So let me say it differently. You have to make your champion your co-conspirator. Co-conspirator is a very interesting word. They're sitting your side of the table. You're together looking at the problem. So what could we do? What will delight people? If you can understand to that level that you know what will make your co-conspirator a champion in the company, how will he or she will get their promotion, or what is make them happy, and you are now contemplating tomorrow how this product, how should it be installed, what features should it have, when do you have your presentation to the VP? Now you're working together. Now you're really solving a problem which this company really has, and you have a champion who's willing to flaunt. So spending time with the first 5 customers to the level that you really understand is gold. Most founders get excited about first 2 customers. They look for number 6, number 7, number 8, number 9, and not fully understanding what happened to 1, 2, and 3. And of course, then they blame the weather.
This is so much fun for me. So thank you. I think that's a good point. And specifically, right, have you seen some patterns where people are able to talk to customers and build faster now than
Yeah,
earlier?
absolutely.
Is that changing? Is that
No, changing,
is that
bilkul.
real based on your experience?
Absolutely. Because now with AI and AI agents, you can have multiple iteration every night. You can, especially if you have something like B2C, when traffic is coming, you can divert traffic, you can do experiments. Let me say it this way. Building a startup is a series of experiments. Every experiment is carefully designed to seek a certain proof point. The way you run a good startup is you agree with your team, what are the proof points? What must be true before we can go to the next stage? What will be true? Okay, if this is the proof point is when customer comes, if they're not spending at least 10 minutes on the website, now we're switching to B2C example. If they don't spend at least 10 minutes, the chances are they're not going to buy anything. But they spend more than 10 minutes, there's a 70% chance they'll buy something. So that's your proof point. You're seeking how long do they stay. Then you start measuring a whole bunch of things. Which page do they come? How long do they stay on the page? When do they bounce the page? All the metric will tell you which ones you optimize. So point is, you should ask yourself, what experiments I'm doing this week? How many experiments can I run? What proof point do I seek? What AI and AI agents are allowing you to do to design those experiments intelligently and run dozens of them very, very fast. This used to take weeks in the olden days.
Are the customer expectations also changes, Naeem? Here, like you said earlier, like I wanted to double click on that part, which is people are playing this new game with old tools. And is that what you're seeing? Another mistake that founders make, that they think they have time while others are iterating that first and leveraging that as one of the largest talent to get to their customers now?
It depends on the customer. If a customer is a construction company, fast is not on their mind. But it depends on what the customer is. If you have a fintech company, yes, the expectation is very fast iterations. So it kind of depends on the customer. That's why the co-conspirator concept is important. You need to understand what is the level of pain and who has the pain. Why do they have the pain? When they start opening up to you, you understand their pain point. So don't, listening to you, there's an implied implication that AI makes you go faster. We must go fast. Fast is good. I want to examine that assumption. It's not necessarily that way. In some cases, yes. In some cases, no. I think the way I want you to imagine is that you have suddenly a much bigger tool set than you did 2 years ago. What can you do with tool set? Imagine same thing when, you bought a house, you had a little, maybe a hammer and a couple of pliers. Now your tool set is full. Can you go faster? Not necessarily, but it'll be more efficient because you don't have to run to Home Depot every time you need a different wrench. You have a big toolbox, you got everything there. So you could be more efficient, somewhat faster, but faster is not the objective. Objective is, what is the problem you're solving? How could it be solved? What experiments can you run? And how do you optimize the solution? That's the objective.
Going to the next stage, right? What happens is at this point you realize, or people in our teams realize, that they can't do it all alone because they need to go build, iterate on the product. They have a good taste on the product side, but also they need more insights. They have not got all the experiments running, and they want to have a team at this point, a team. And sometimes they switch between, should I hire somebody who does sales and work with customers and I can build, or sometimes they are looking for people who can build and they can work with sales. What should be what is an early stage team looks like for AI specific products, let's say, and what's your general guidance in building that, and mistakes you can make or mistakes to avoid there?
No, made plenty of mistakes, especially most of the mistakes is hiring the wrong people or not firing them fast enough. That's probably the most common mistake. But I think the issue is it's not a choice you make at the early stage. You have to do both. That's why the life is hard of a startup founder. You cannot build unless you know what customer wants. So you have to go sell and talk to people. You cannot tell somebody else what to build if you haven't felt it right here and able to articulate it. So, okay, so it could work. We have a co-founder. One is a guy looking outward to customer, one is a technical guy, but they don't need to have very low latency, high bandwidth communication, almost a mind meld. Usually that mind meld takes time and effort, and most people don't do that, and they start growing in different directions. And so what they're building in R&D is not quite what you heard from customers, and you are not able to communicate in a way that it was heard. So in the beginning, you have to play both roles. You have to take your CTO to customers because you can tell him or her what customer wants 10 times and she's going to hear it twice. But you take same person to the customer, suddenly their mind opens up. It just like it smells different to them. So I do that all the time. Whenever I had this discrepancy, I took my engineering guy, let's go see customer.
Yeah, I
Right?
get this all the time, right? That people tell me to go when I say, let's get somebody in sales. They say, no, Mahesh, if you think you can build it, you should be able to sell it. And if you can't sell it, don't build it. So I keep going like back and forth. And but one thing that I wanted to just double click what you said, which is I think very insightful here, is that you need to have that mind meld with low latency. At the same time, you're looking at these people that you want to hire, and if you're not lucky, you don't have a lot of background working with these people. You are looking at somebody's recommendation, highly caliber person. But at some point, you are running you with high quality people, you get a very small window to test them. You can't just like say, let's just work for 1 year where I own everything and you just work for free, or here is bare minimum salary. So at what stage, what is the parameters to get these high caliber people in? And second is at what stage you think, or what learnings you have, at what stage you start offering or trusting enough that they can be co-founders?
Well, there are 3 points to be made here. First of all, what is your currency to attract talent? Well, it's two things. It's your vision and it's your stock options. So if you have a grand vision, which really makes sense and is logical and you're not hallucinating, you will find people will give up a lot to come work for you. Actually, in the last company, we hired somebody, he was making like 400K at Google, and we got him at 140K salary plus stock. He gave up because he saw something, that he learned something, he'll broaden his thing and he'll make a contribution. So this was possible. So because these A players can always get a job, always make money. So they're looking for something else. And your stock option and vision is your currency. Most people who cannot attract talent need to look in the mirror. A players attract A players. B players attract C players. So if you're not able to get the A players, maybe you're not an A player yourself. And third thing is, don't wait too long because you don't have time to wait. Start. Remember, you have stock vesting. So even if you brought somebody on, you give them 10% of the company, but that's vesting over 4 years. You will know within 3 to 6 months if it's not working out. Then you can stop the vesting. So you haven't given up all the equity. So people get stuck with this. They say, well, I don't know. I haven't tested the guy. Well, then you're going to be wasting 3 months looking for the right person. Sometimes you just have to hire fast, fire fast. But having said all that, it's not easy to make this decision. I have been in this decision more than once when I got desperate. I had to make some choices. I lost jobs because I had the wrong salespeople are the worst one. They fool you.
And on that, right, most of us or people who just start these companies are coming from a background where either they were like really good in doing something in a company and always worked on one particular field. Let's say they're good at engineering or they're good at one aspect, they were A players, and then they went out. But as you were mentioning, right, leadership, like building your vision, building a team, working with customers, and then also doing all the logistics of a company, and also setting structures where you can iterate fast as well as on the right things, requires you to wear different hats and grow in multiple dimensions. Have you seen, is that normal, first of all? And second, any tips there, if it is normal, or what you have seen, or what helped you grow, or what you suggest the founders you interact with now?
So A, it's normal. B, not everybody can hack it. And C, you are a great engineer and you started the company, you raised some money. You don't get to do any engineering till kids go to sleep. Because all day you're fighting silly problems. Mommy, he took my pencil. And you're trying to resolve between these two people who are fighting with each other. When I was CEO of the last company, the person who went to Costco to get snacks was mostly me, because everybody else was doing something important. So the point is, yes, you will do all those things. You have to enjoy wearing multiple hats. If you're not comfortable with this, then get somebody else who does and let that person be lead the team. This is very normal. Every single day is different. Every single day you're fighting different crises. You only get to do the real work late at night, usually. And this is why this is not for everybody. Most people say this is not a life. That's not what I went to school for. That's not what I even enjoy. Some people, I do enjoy very multiple. Every hour is a context switching. So in a finance meeting, you look at spreadsheet, then you're talking to a customer, then you're solving some fight between two vice presidents, then you're actually writing a proposal. That every day is full of exciting little nuggets. But the problem is you still have to think about am I going in the right direction? What's the big vision? So you have to get away from your day-to-day without your calendar once a month at least, if not more often, when you go to a forest without your iPhone and you really ask yourself, am I really doing the right things? Am I going the right direction? If you don't, it's very easy to get lost in the forest. You're busy every day, you're doing useful thing every day, but you're going in circles and you forgot.
No, I think very well said on this one, right? One thing that is also true, right? One aspect of that is at some point you're looking at funding, and navigating the funding space is never done, right? Most of us have never like raised any money. So and also there's a lot of hype on this. So any nuggets there, like what you have seen, you have raised a lot of money yourself and you have helped people raise a lot of money when you guided them. What works or how to navigate the funding space?
So you have to ask 5 questions to even establish, are you investment worthy? If you cannot ask this fast 5 questions, don't approach an investor. The 5 questions are, is there an unmet need? And why is it unmet? It's not legal, not technically possible, not profitable. Why is it unmet? Then second question is, who has this need? Market segmentation. Number 3, are there enough people in this segment to make a big enough business which will attract investors? And number 4, can I find a white space? White space is there's an underserved market which is not happy with the options available to them. That's your weakness in your competition. And number 5 question is, can I, based on my background and the people I can attract, can I build a compelling solution which will delight this segment? So these are the 5 questions. Unmet need, market, who has this problem? Are there enough people? What's the weakness of the competition? And can I really solve it in a delightful way? That's your basic homework. Most people don't do this homework. They get excited about technology, jump into it, and sometimes they even get some bored customer who's looking for some excitement. They even get them. They say, yes, I'm successful. Got the customer. Yes, I'm on to something. No, you maybe just got in some oddball situation which got you lucky with the customer. Have you answered the 5 questions? So then if you answer 5 questions, now you're investment worthy. You're not investment ready. That requires 5 additional questions. What are the 5 additional questions? Well, those questions are, what is your business model? How do you make money? Subscription, ad, use-based, premium, whole bunch of possibilities. Number 2, are the unit economics favorable? Can this company scale? How much gross profit do you make per transaction? What is your customer acquisition cost? All that goes into the business unit economics. Number 3, what's your go-to-market strategy? How will you find customers? What partnership will help you propel yourself forward? What channel will you use? That's the third bucket. Number 4, how big a company can you make? What needs to be true for you to be, let's say, $100 million ARR company? I mean, 100 million ARR is a successful company by any metric. What would it take? 7 years? 3 years? What must be true? What will be a trajectory? And number 5, what is the next de-risking point? And what do you need from investors to get there? So if you're just starting out, your first de-risking point, we get 10 paying customers. It's going to take me about 17 months. And that's why I need $1.2 million. Okay, that's your 5th. It comes from the calculation. So these are the 5 questions. If you can answer, now you're ready to talk to investors. So if you just listen to what we just said, how many founders do this thinking? They jump the gun prematurely.
Yeah, no, I want to just double click on a couple of things here. One is this idea that can you delight by attracting the right people? And there's one argument in AI which people are making, and I'm not calling myself because you've picked it up. The idea is that maybe now I can build agents and I can be a solo founder. And
Yeah.
I don't need, maybe I don't need to check mark this item of can I attract enough people which are gonna help me build this? Maybe we need just 2 or 3 people. And as I build for first 100 customers, that momentum will get me the next person and then next person, and that's it. That's our company, and we will reach 100 million ARR soon enough. Maybe is that an illusion people are living in, or you're seeing some possibilities that that could be possible? Not even not today, but maybe in near future, or you're seeing early signs of that happen?
Yeah, early signs for sure. And actually, it's widely said, and you heard this from other people, I'm not saying it. By 2030 or before, we will have a company with $1 billion revenue with a single employee. So people are talking about that level. So it is definitely will happen. We're not quite there yet, but the vision is there. Evolution is happening. What used to take 7 or 8 people marketing team now is 1 or 2% marketing team. And they're able to accomplish a lot of that. A lot of companies are starting exactly helping you do that. It's not very far. I mean, I don't know all the way there, but the fact is what used to take, let's say 10, 12% team can now be done with 4% team. Answer is yes. See, all these agents, sales agent, marketing agent, finance agents, I haven't seen anybody really become successfully deployed. I mean, there are lots of
Yeah.
seeds being planted. Nobody has emerged as the winner, but it will happen probably even with next 12 months. So there's a lot of activity. So as soon as these come out, you people start using it, you'll start seeing exactly that. So it is gonna happen. Question is 6 months, 12 months, 18 months, or 36 months. It's not very long that you will see companies getting started with very little. So now this is interesting, and what that means is what will VCs do? The VC business is going through a huge lobotomy, and there's a discussion about Lightspeed just announced yesterday. They're changing the model. They're becoming RIA, registered investment advisor. So a lot of VCs are turning into RIA model. RIA model, the traditional VC model is you raise a bunch of money, you deploy very quickly into 30, 40, 50 companies. You wait 7 to 10 years to see what happens. Well, that's not going to work in the age of AI. So this RIA model allows them to invest in secondaries, not have to liquidate the fund in 10 years. You can hang on to fund for much longer. You can invest in other derivatives and other parameters which were not VC were not allowed to. So the whole venture capital industry is changing to some new dynamics. So it's very interesting time to be alive.
Thank you, Naeem. That's all the questions I had on these topics. I think you threw a lot of nuggets. If you have to sum up this conversation with this, we looked at very different aspects of it, and we looked at from this new things that are happening in our world with AI. What are like your future outlooks for people who want to build things, and what is that couple of things that you want to just leave us with, that hey, if you're going to build, it's the best time to build, but here are my 3 things.
I think the thing to do is you still need to do market research. What ChatGPT and other AI have done is made the market research easier. Instead of having to knock and talk to 100 potential users, if you spend like a 2-hour session with the AI, whether it's Gemini or Claude or ChatGPT, and tell them to become the persona of that person you say you're a construction manager at a construction site. Your company does $20 million in sales. You build commercial real estate and warehouses. I'm going to ask you a bunch of questions. So then you can interview these people and really get outside. You still have to talk to some real people to make sure they're not hallucination. But my point is, it's easier than it used to be. What used to take 3 months to do market research, you can do that in a weekend. So
Yeah.
you need to have that mindset. Number 2 is don't be afraid to use agents and AI in your construction. You will probably make mistakes. They'll probably flounder. but doing that will teach you much, which is going to be good for you as you go forward. So don't be afraid. Many people are afraid to download, even, go to Hugging Face and get something and play with it. And yeah, it's going to get smarter than you, but deal with it. And third thing is, you just cannot worry about raising money. Get close to customer, understand it, solve a real problem. Money will come to you, because all investors are chasing people who have traction and great insight.
So Naeem, again, on behalf of all the community and the team and people who have said a lot of thanks in the chats, thanks from bottom of our heart, and would love to have you in our community. We'll add you, and you can ignore all the questions, but people would love to, at least you can see like how these people are iterating.
Yeah.
And would love to have you back because I think at that point we might have more, and we might have seen more of what AI is becoming, and maybe we will have one person building $100 million ARR companies by then. If you want to talk to Naeem, I put Naeem's website. Naeem teaches at UCB. He has his coaching sessions. He recorded 12 podcasts. So if you want to get more of those, they are there on the website. He wrote 5 or 7 books at this point. Please read more nuggets there, and hopefully we can get him back. Thanks everybody for joining.
Yeah,
Thanks once
enjoyed it.
again, Naeem
Thank
and
you,
Jackie, for
Jackie.
making this possible.
Thanks, Jackie. Thank Mahesh. Yes, definitely enjoyed it. And great questions. Look forward to seeing you guys again.